5x leverage long Bitcoin, and one of those X's is one of my kidneys, and I want to increase the X's by an additional one. So, what do you think?
I mean, now is not a bad time to like slowly accumulate your kidney into Bitcoin. We probably got further down to go,
Nah.
but if you're looking for like a strong bottom price, who knows? It looks like anywhere between like the 25 to 30K range could hold up here. We got realized price at like 24,000. It's always been like a generational bet. And then, kind of like 20 to 24 is probably like maximum pain capitulation bottom coming in. So I've been wanting to back up the truck as much as possible and load up on Bitcoin if we get to see some prices in the 20s. So we're getting close. I worry now that like basically you're looking for a bottom in equities. So I still think we've got some room and some volatility to go there. And it's been crazy to see, especially with everything going on with Terra and Luna, to see Bitcoin already hit 30K today is much faster than I expected.
Can you elaborate what you mean? What's going on with Terra and Luna?
Yeah, so sure. So I'm no expert on this, and I'm always trying to like get my research game up on like trying to understand basically between Terra and Luna, like this algorithmic stable coin launched by Do Kwon. They have the Luna Foundation Guard, and essentially, the stable coin experiment to try and, algorithmically back this Terra peg to like a US dollar. And, with minting and burning of Luna, this altcoin, to be a huge part of that, which has had a huge speculative rise of, why some of this has been steady. But more recently, the Luna Foundation Guard, which is kind of like a smaller council of people who are closely connected to the project, they bought, over 42,000 Bitcoin, which, anywhere between $2 to $3 billion in prices there. And so basically what happens, and this is, not all the details, but basically when the peg of Terra goes away from the US dollar. So earlier today I was trading at like 98 cents. Essentially there's an arbitrage trade there that is expected in the market in these times where people come in and they bid the price of Terra back up to $1 and they make kind of money on that spread. But in like real severe times, the Luna Foundational Guard has taken out all of these Bitcoin reserves. So when Terra really sells off, when the peg gets really out of whack, they basically have these reserves just in case to sell back into the market to stabilize Terra. And so right now that dollar peg has gone down to like 93 cents. They've had what seems to be a lot of like external partners or people, with invested interest into the project and making money off Luna and Terra come in and try to provide some liquidity in the markets to, defend the Terra peg, get it back up. But it's selling off incredibly hard today. But basically they have this document that says, if we need to sell Bitcoin into that market to defend the Terra peg, we'll do it. And so that's how it relates to Bitcoin. Essentially, they've been the largest buyer of Bitcoin over the last 2 months, and maybe one of those big buyers that have kept Bitcoin from, not performing as worse as some of the equity drawdowns we've seen year to date. So currently, right now, I haven't gotten to verify it. I've seen a lot of messages coming out about a lot of Bitcoin and their balance moving in their wallet right now. So I'm not sure if they're starting to deploy that capital, sell some of that Bitcoin, but that's essentially the next step if the Terra peg stays way off of what the dollar peg is.
Sam, I also want to ask, like, I don't want to detract from the Terra stuff. Like, that's to a degree terrifying. We saw Do Kwon send out a tweet essentially saying that they are going to be deploying some more capital as well. I want to switch the gears though to MicroStrategy. And where does MicroStrategy sort of leverage buy as well as accumulation strategy fit into this entire equation of the Bitcoin price crashing right now?
Yeah, it's a totally interesting one in the sense that I had tweeted out some levels from like their earnings announcements last week of saying like, you have all these on-chain levels, talking about it before. You have like on-chain cost basis, you have realized price, which is that on-chain cost basis of the entire network. But MicroStrategy's basically cost basis right now is at like 30,700. So they're at net, just below, getting underwater in terms of everything that they bought. Now, a lot of their debt that they have, it's starting to trade higher in terms of the interest rates on that debt. A lot of that debt spans out to like 2027. So in terms of like, I think they have over $2 billion in debt that they've largely taken out to buy Bitcoin at some interest rate. And it's strategically taken for it to be a cycle away to give them time for Bitcoin to appreciate, to be able to pay that off. But the other piece is that they have like a short-term debt bill that's, I think it's about 205 million that they just took on from Silvergate loan. And essentially it's to buy more Bitcoin, but that does have like a rough margin call price. I think they associated that being like 21,000 is the price for them, where like the margin call comes in. Now they have like 94,000 Bitcoin unencumbered on their balance sheet, able to deploy if needed into basically that shorter term debt. But it starts to get, I mean, in terms of how the market is pricing it, I think they're seeing MicroStrategy is a start to be like an incredibly like a lot of a riskier option on Bitcoin, and like this kind of Bitcoin call option type. I don't have access to some of the credit default spreads, but those are rising with the interest rate on their debt has been rising in terms of what they owe in 2027. And people are a little bit more cautious, I think, about their revenues and their cash flows that they're making in terms of the interest payments on their debt. So as this Bitcoin price lowers, I think the market itself just starts to see MicroStrategy as a much more riskier option for like a Bitcoin investment vehicle, and they start to become more worried about the repayment back on some of those interest rate debts in the future. So it will be curious to see, obviously Saylor's committed to saying like, we're never selling our Bitcoin and, wanting to go down with the ship if needed. But as we get to some of these other levels, which I don't think, like if we visit some of these like lower 20 levels, we're talking about like the margin call areas, I don't think we'll exist there for long. It'll be interesting to see if they need, for capital purposes, just cash flow in general, need to sell any of their Bitcoin when we get lower. But yeah, essentially, like I think the MicroStrategy, this like cost basis is they own just under 1% of the network, so it becomes like a pretty interesting critical level if they're able, if MicroStrategy did have the scenario of them going under.
So Sam, just quick, like talking strategy. Let's say you're feeling bearish about, maybe the next 2 years up to the next halving. If we're gonna follow like a super cycle theory, if someone's trying to, I don't know, like collateralize or go use leverage to go longer on Bitcoin. I mean, not official financial advice, but like, what's the move here? You wait for it to drop even lower. You get in now. Like, what do they do?
Yeah, sure. So I think the safest bet is to probably watch this play out, right? You don't ever want to catch like a falling knife in markets. And honestly, I was surprised to see all of markets already hitting this with only like one Fed rate hike already playing out. Like we're already in like a tightening cycle that's going to continue to play out over the next few months. So I would say give it time, let support kind of play out in the market and find these prices. And a long-term strategy, like you're saying, Bitcoin back down to 30,000. I mean, every on-chain analytics metric, every kind of like stronger cyclical metric would tell you that 4 or 5 years from now, like as Preston Fish would say, like, just fall asleep, close your eyes, wake up in 5 years and see what Bitcoin does. I mean, you're getting a huge accumulation zone here for a lot of people, but it definitely can go worse because I don't think we've seen like a credit unwind. So you want to look, and we talk about this all the time, like these rising credit spreads that are happening, like debt levels for corporations that are above treasury rate levels that it kind of explode up in terms of like real big credit unwinds. And also like the VIX is an easy thing to watch. We're talking about there's going to be more volatility in the market. So want to see some of those like explode up, see like more of a capitulation happen. And then you want to see some like good support in like accumulation buying zone around there, right? Like it might be more pain for someone to say like, oh, I think 30K is the bottom, and then we revisit, 20 for like a short period of time, and we come right back up would be a good sign that like, hey, we're bouncing off that. So in terms of like collateralization, or like if you want to take on a little bit of leverage. I was just looking at like some unchained capital rates myself. I'm like 3-year kind of rates of saying like what's interesting in terms of like how much you would pay on like, I think on a 3-year rate, you're paying like 14% interest and you're paying like the lump sum at the end of maturity. So even if you're saying like, okay, price could extend into a bear market for like 1 or 2 years, what is the like time frame do I think, like if it's a 3-year time frame, do you think you're going to be able to outpace like 14% in interest? So I just tell people, wait for like legacy markets to look for kind of bottoms in there and like real capitulation events and pain. I don't think this is it yet. I hope I'm wrong. I hope like 28 to 30K is really defended. But this has already happened so much in just one day into the week. So I think we've got some more to go.
Sam, I need to ask the question now. So we have talked a lot. I've asked you guys so many times to the point where I know how annoying it is about the correlation between the NASDAQ and Bitcoin. Something that I personally have noticed when I sort of chart it out between the two is the Bitcoin seems to be some sort of a leading indicator to the NASDAQ. Bitcoin peaks and then all of a sudden the NASDAQ peaks shortly after. Bitcoin bottoms or makes a new short-term low, all of a sudden the NASDAQ is making a new short-term low. Like, where does that sort of trading pattern that we've now seen pretty consistently since November fit into the future of where we can maybe be looking for a bottom? I'm not asking for financial advice. I'm more just trying to set expectations appropriately. I'm personally looking for Bitcoin to make a bottom first. Do you maybe buy that hypothesis or do you buy something else?
Yeah, no, I think that's totally fair. And only because you ask the question all the time, but it is a good question to ask. And I just honestly tweeted out another chart about Bitcoin and the NASDAQ today, about them tracking pretty much 1-for-1 since November. There's some other tech stock indexes that are a little bit more risk appetite on that track like Bitcoin. But I think you're totally right in the hypothesis. That's how I think of it, right? Like Bitcoin is much smaller market, but it's just 24/7 hour market. It's probably the most free market that we have. And if you're going to see risk and appetite sell off, you're going to see that sell off first and get out of positions and capitulation in Bitcoin versus like some other, higher regulation, tougher entry exit kind of vehicles in finance, like the NASDAQ or other high level indexes, or maybe some particular stocks. So I still buy that we'll see like probably the bottom in Bitcoin for just like, let's say risk on or equity markets first, or like major capitulations, like what we saw in like the March 2020 COVID crash. And like, that's a good example to go back and just say like, this is what like real capitulation and pain can look like really fast. Like, I think we've gotten something like a little bit more of a gradual sell-off. But those type of moves, when you see like just the past day, I mean, today is probably another 9% move down. We just had another like 2 days ago, or like right before the weekend, I think on Thursday or Friday, another 8% move down. And we've seen like we've seen a lot more larger capitulation moves just over the last 6 months. We've seen Bitcoin move 10, 12, 14, 15% in a day. And some of those are really driven by like the perpetual swaps market, the futures markets, which will have an impact, maybe not as much as those times. They're getting a lot more, efficient and experienced in those markets, but the capitulation moves are seeing in like these smaller day changes are pretty small relative in context to what we've seen before. So I'm looking for like another like some more capitulation type moves like that. I'm looking at like how well 28K has been like this level where there's like a lot of stops built up for Bitcoin. 30K has been this huge support. I think what's really interesting about this time around for Bitcoin is like you have all of these investors, people, holders like us, and even higher institution ones that are like looking for the discount price that they can get for Bitcoin over like a 5-year time frame. Where as before, I think it's just capitulation at all ends, get out of, rush to cash. And I still think that is the case, but you have more players that are saying, okay, well, if we even get close to like a 25, 28K, I'm, incredibly going, whether it's irresponsibly long or opening up huge positions, because it's kind of the once in a cycle chance that you're going to get.
I'm also curious your thoughts. So this correlation, it seems to be more recent, especially you bring up like the November chart, which is also pinned at the very top. And a reminder for everyone who's on Twitter Spaces, we are live on YouTube as well. The very last tweet, if you scroll all the way to the right, gives you a link to join us over on YouTube. But I saw this tweet over the weekend, and I have both the NASDAQ and Bitcoin charts up right now. And it looks like, based on price levels, historically speaking, the NASDAQ has now reached price levels that it saw and was trading at in like November of 2020. They're essentially back down to like 2020 levels. Meanwhile, Bitcoin still holds above that 28,000 level that I have treated as some sort of a like fake level of psychological support that until it's broken, I will trade as such. What merit, if anything, does the fact that the NASDAQ is essentially reaching levels it was at 18 months ago, roughly, versus Bitcoin still holding above that 28,000 marker? What credence, what does it give us in our argument against the general stock market?
Yeah, that's a great question. And I would say that's generally like, although that Bitcoin has this relationship and has been getting forced down and has been selling off and has that correlation, you've seen it find strength at the same time. And, you know, we can use some of the on-chain data to say, hey, look, like just from a long-term holder perspective and the way we cut that data, you would expect a lot more, you know, sell-off in this. It is one of those assets that it just has the conviction of what people look at it as like a long-term view of an asset. And it's not so much like, what do you want to hold for the next, what are you most confident in the next 20 years and you want to hold? Do you want to hold the NASDAQ 100, or do you want to hold this asset in 1.5% adoption, 2%, whatever you call it, that's going through its monetization phase that has proven every 4 or 5 year cycles that it's going to be, you know, significant factors above what it was before. So I think that is really at the end of the day of like, that's some of the fundamentals and like the network growth that's in Bitcoin that is like the promising point of that's holding up strength and why people want to own it for the next 10 years. And so I can't say that much for like a particular stock right now. Maybe people are bullish on individual stocks, but like tech as a whole, I think has been just seen as this speculative bubble, liquidity bubble, like ready to be popped for like quite a long time, like overvaluations. And so I think it's harder to pick companies within that you think are going to be the strongest over 10 years, where Bitcoin already has that kind of like conviction. It's growing that investor base, it's growing that adoption. So I think that's where you're seeing some of the strength and where it's holding up. In terms of like the levels, if you're looking at like the SPX or the NASDAQ, obviously like looking at a good case study of like where the Fed put was last time, like where did, you know, extensive monetary and fiscal stimulus come out? And it's like, you have those COVID like crash levels essentially right in that March 2020 timeframe of like right after that like recovery, like right before it crashed. That's essentially kind of like levels you might be looking at for like a really low bottom in terms of equities. So still expect Bitcoin to follow that, but like to your point, I expect it to hold some strength too. And it really all depends on like, where do people just unload the truck and buy at? Is that at 20K, 25K, 28K? Hard to say right now. Like all of those are interesting, like support areas, like 30K, 28K has been like such a prominent support area in the past, and where a lot of interest is right now too.
All right, so if we just do a quick temperature check and just go around everybody on the stream, like how low do you think it's gonna go this cycle, and what makes you uncomfortable? I guess I proposed the question, so I'll say I think 20K easy would be very interesting to see again. You think lower? Q's shaking his head.
Q, I think, excuse me. Q, I think shares my response, which is you fucking bear.
Yeah, fair.
I will admit, I kind of take P side of this. I think 20K is too low. I know, Sam, you're going to be the last to answer this, but like in the tweet that we have pinned to the top, you highlight the 20K is a possibility because that's that 80% drawdown based on previous cycles. I buy into 28K being the floor from the psychological standpoint. The psychological standpoint is literally just all these technical indicators that like I love to use and bring up. They weren't formed for the stock market. They were actually formed in trading rice in Japan back in like the 1600s. And like they were trying to essentially trade the price of rice based on what they anticipated the future cost or whatever would be. And it was all rooted in human psychology. And that translated over to the stock market. And I genuinely believe people's psychology, when they see that 28,000 number, where a lot of people kept smash buying, where it's been a consistent level of support. And I believe at this point now, if it goes down and touches 28K, that'll be 9 times that it's used that as support. On the flip side of it, though, if we go under that, like you ask, what am I afraid of? I am afraid of below 28K. My personal hypothesis and my personal thesis get completely thrown out the door, and I have to remap a lot of things. So maybe I'm a little lazy, but I don't want to do that. So 28K.
Well, that's like a function of you trying to predict what Bitcoin will do. But I mean, are you scared on a protocol layer? I mean, what's wrong with it going? For me, it doesn't matter where the price is. I don't think. Like I don't think I'd start to get really worried unless it went to like a historic price that I haven't seen in my time in Bitcoin.
Dude, to be honest, like Bitcoin can go down to $1,000 and I will like be happy and excited. The price isn't what worries me. It's now the barrier above to like regrow that price level, because when you have like, again, I'm just coming at it from the angle of like understanding technical analysis. And when you have a level of support that is so well entrenched, which is essentially a signal that every single time went down to 28K, there were an amass amount of buyers coming in to push the price up. So that's their realized price individually. Psychologically speaking, the moment that they're now a group of people who have always been in the black, once they go into the red, psychologically, that's when you have overhead supply. And now all of a sudden you reintroduce a new psychological limit, which is these people don't care about getting back in the black. They just want to get even. And so that means that the moments we get back to 28K, you'll start to see potentially selling increase based on this psychological aspect of this type of technical indicator. So that's where my nerves come in from a protocol level. No, like so long as there's no attack on Bitcoin and so long as no one has double spent their Bitcoin, there's nothing to be worried about longer term. It's more about timing things. That's what I'm more concerned about. Like,
so how do you consider this a type of attack on Bitcoin? Is this a psychological attack on Bitcoin?
Wait, what? Come on. Y'all are out of your minds. We are going to be totally fine. If we go down to 28K, which again, I said this earlier, I maintain my previous prediction. I have been saying 500K by conference day. Again, that was Bitcoin 2022. I think it's still in play. We could still invent time travel, go back in time and hit 500K before April 6th. But all joking aside, I mean, this is not a threat to the protocol. This is a price dip. I mean, this year has been historic in terms of the Bitcoin price action. It's also been historic in terms of the broader markets. Like we are seeing, these are the craziest fucking times in modern history, in my opinion, certainly from a monetary perspective. Something like 80% of all the US dollars that have ever existed have been printed since 2008. That is insane. And I think that this is all totally fine. As I said earlier, I already sold my second kidney in order to get more Bitcoin. I'm about to sell my third kidney and also my left foot. I don't need it. What I need is more Bitcoin. And I challenge all of you to embrace that, aesthetic as well.
100%. Love it. Had any fiat left, would be buying, right, Q? Well, Q wants to go into mining right now. Is this, Sam, what do you think? Is this a good time to go into Bitcoin mining?
Wait, Sam, no, don't answer that. Answer the question of the roundtable. What is the price?
Yeah, so I like P's point of like, this is really unprecedented times, just from like, not just a Bitcoin market perspective, but like a macroeconomic regime shifting, totally different than what we've seen over the last 10 to 12 years. And I think that's been tough for people to like look at that reversal. It's been dynamic. We've been talking about for months, like a giant credit unwinding in the face of what we've had in terms of like QE and fiscal monetary stimulus over the 10 years is going to be devastating. And like a lot of the growth outlooks are declining with it across so many different regions around the world. So what I would say is like, I'm preparing for a price that gets to that 20 to 25K range. And that's like dipping below the realized cost basis of the network. That's what we've seen multiple times happen through cycles. Those have marked generational buying opportunities, the best times to accumulate. I'm preparing for that I'm interested to see. I think a lot of people are preparing like for that scenario, or you know might want to be if you're not. But because so many people are preparing for that, when you get something to like 28K, which would be, let's say, another 10% down from here, I think probably like SPX has another maybe 10, 15, 20% down to go as well. And maybe Bitcoin's been hit like harder through the worst. So when you get to that 28K, there's going to be a lot of interest and demand, even if that's not the bottom. So like we might see a lot of accumulation 28K. You might see price temporarily go to 20, 25K, but it won't last long. I mean, at the end of the day, whether you're buying like 20, 25K, 28K in 5 years time, it's really not going to matter or make a lot of the difference. So just like I don't see it going below 20K, and I don't see it going below realized price 24K for long. So those are kind of the worst case scenarios I'm preparing for.
Because you're on the show now, Sam, I get to ask you. So what is the technical indicator of like all the realized price short term? Like I know those levels are above us right now, but is there an indicator trailing us that is trading at that 20,000 level? Or is the closest thing I believe you posted it, realized price at 24K? Is that the lowest indicator we have?
From an on-chain perspective, like realized price is like the lowest like there, and you could even look at some previous cycles of like when price went below that. So you could say maybe like, okay, 10% realized price is what you should be looking at based on like how psychologically these capitulation bottoms have performed in the past. Another interesting one, we posted this in our like monthly report. This is by Charles Edwards, but he has a Bitcoin production cost. It's like the baseline electricity cost, not the business cost for mining. And right now that's at like 23,000. So that's probably even a little bit closer. And that's like your like baseline electricity miner capitulation, not including like business cost, fixed costs associated with that. So that's just from like an energy and like network dynamic. That's also an interesting level as well.
Just a quick reminder for everyone on Twitter Spaces, we are also live on YouTube. The link is pinned to the very top, and we are not going to be inviting people to come onto the stage. So apologies for that. But feel free to bombard Sam's Twitter DMs and inbox with all of the questions that you might have and all the free Bitcoin that you're offering. Just offer it to Sam specifically. I want to now ask you, Sam, broadening the scope, but specifically now in the stock market, you know, Bitcoin miners all over the place. We have the Bitcoin, a couple of different ETFs, if you will, with the We're Going to Make It ETF, and we have some future stuff, GBTC. Any of these sort of products, if you will, that are offered in the stock market, are any of them catching your eyes right now? Are you looking at miners maybe to have a nice extra volatility swing here?
Yeah, I mean, I think we put out in like our previous mining pieces of just like pricing miners in Bitcoin, whether you're looking at like a dollar value or Bitcoin, whatever your unit account is, like they're all hitting like I think even Core Scientific is hitting its all-time low today. All of them are hitting like ridiculously these huge lows that have been seen, you know, in years since some of these have been traded. So I think, yeah, there is some upside here. I mean, if you're comfortable with like the MicroStrategy debt position there, that's kind of like a long like punt, like call option that can have like higher exposure on Bitcoin. I still think there's more to go though. So I would be cautious to like load up on Bitcoin miners. Maybe you average into a position as it goes further if you want to get like more upside exposure there. Basically, you know, looking at like North American miners with like a lot of infrastructure that are going to be around for like the next 5-6 years, that are basically going to weather whatever liquidity crunch and valuation that comes at them now. And then just from like a mining perspective of whether you're not buying miners, but you're buying rigs, you're starting to see like rig prices, they're going to tank down with Bitcoin prices. They're going to start hitting like post-China ban lows in terms of those. I think that's, you know, fortunately where I got one of my first mining rigs. So that's a time too to start like thinking of when the rig price is so low and you're expecting a different type of return in Bitcoin over the next few years, and you get a decent electricity price of kind of loading up on rigs, just taking really advantage of the capitulation. But again, I'd be cautious until we see like a lot more durable bottom in equities and stocks. Some of those are looking surprisingly pretty good, but mining stocks, they in like bearish times, they're worse performers of Bitcoin, and then like in bullish times, they're much better performers. So it is really all about timing. And I probably personally would not be taking on any positions for or large lump sum positions for maybe another couple months seeing this play out.
Sorry, I'm unsending all the texts to people. I said back the dump trucks up. Give me a moment. But in all seriousness, like in times like this, we're all still dollar cost averaging. I know a lot of people are buying the dip and doing bulk purchases. Sam, do you mind divulging a little bit of sort of what's your strategy to accumulate as much as possible during this opportunity?
For sure. So I would say DCA is the best for most, has been proven to do so, kind of like buy all the way down, average in. And then essentially, like if you've been raising cash over the few months, like putting in a lump sum of like what you think is like a bottom, like coming your way or where you get that, or like some support on that. And then I think people that are comfortable with it and want to take the risk and see the upside of like taking a small percent of your portfolio to some leverage kind of position, whether you're using your Bitcoin as collateral and grabbing USD on top of that. I think you just have to be cautious and cognizant of like how much you're taking on and what percent of like your portfolio that is and how comfortable you are in managing your cash flows. So that's generally, I don't think you have to like really outsmart these bottoms. These happen all the time. They've happened through cycles. It's really time that is going to solve through like an adoption phase here. So I would say most people, unless you're trying to like actively trade and do this, like still DCAing, and then whatever cash you have, kind of lump summing that in what you think might be a good bottom.
If I can just jump in, I think one of the things that is so important here, and just in general, is never putting yourself in a position where you might have to sell Bitcoin in order to fund a short-term emergency or something like that. So one should always have an emergency fund, credit available, whatever it takes. Like, do not go, I joke about like selling a third kidney. Don't do that. Don't get a sixth mortgage on your second house. Put yourself in a situation where you aren't going to have to get liquidated at the, at a bottom that's $100 less than the one that you thought was going to come in.
Yeah, I would agree with that in terms of leverage, but I think there's people out there that are living completely on Bitcoin, that can be your emergency fund. You know what I'm saying?
Alex, please feel free to fully counter P's argument, because I know that you quite possibly are the perfect antithesis to what P is saying.
Hit me with it.
Well, I don't really need to counter. I mean, I agree with you. Don't YOLO or like FOMO into some weird leverage position. Don't take on debt that you've never had any experience taking on. Like, do your due diligence, take your time, make careful. This is not the time for hasty decisions. I think if you're going to make a hasty decision, just buy some Bitcoin, but don't buy so much that you can't, function your day-to-day life, whatever that means to you. I'm just saying that if you're living kind of a Bitcoin only lifestyle, that is my emergency sovereign wealth fund. And sometimes I don't know. There are times when some people sell Bitcoin. I don't think that's such a terrible thing. But yeah, the strategy is definitely accumulate and hold for years, because the current tax law in the United States is structured in such a way that you should buy Bitcoin and hold it forever. There's no reason to sell it and get that capital gains tax.
Sam, I'd love your thoughts, just, going back to what we're seeing in the market, and maybe, I know this is more speculative than anything, not rooted in fact, more your opinion, but what are you attributing this current downturn that we're seeing to? Is there anything in particular that's maybe triggering, whether it's in the stock market or Bitcoin specifically?
Yeah, I would say largely like the framework I use that from understanding of like that this has been coming, that this has been as like rates are rising across the board. So interest rates everywhere for essentially equity and larger like financing costs abroad and this is like a result of essentially a bubble that has been meant to pop for a long time. A lot of like easy credit impulse that we've seen, and now we're starting to see rates probably have some of the fastest rate of change that we've ever seen before. Like if you're looking at like mortgage rates is a great example of that. To look at that rate of change, you're looking at the whole treasury curve since November has been flying up. You're looking at essentially just a tightening liquidity in markets that is some of the fastest tightening liquidity just in terms of rate hikes and interest rates moves that we've seen. And so now essentially this relates to, okay, all of this debt and credit in the system that whether people have been rolling it over or relying it on or having these low rates and servicing whatever they've been servicing with this credit, it's all going away. It's all fleeting. And it also comes at a time too where post COVID, we haven't had this kind of growth impulse that we've expected. Maybe the recovery and the stimulus went, a decent amount of ways, but we essentially need more to keep the growth story going and to continue. And so when you have like these tightening liquidity cycles, these rates rising at like historically fast paces, you had some exogenous shocks in the supply chain as well, which makes inflation even worse. Essentially, you have this cocktail of monetary, fiscal, economic regimes coming together that anytime you backtest this across any assets, it's not a pretty picture. And 2022 has been, shaping up to be this for like 4 or 5 months. So in terms of this particular day, I think you can't really, it's hard to say like when those unwind days happen and when they're going to happen, but it's certainly as an effect of everyone is still highly positioned and bullish. You're still seeing like ARK inflows, Kathy Wood's fund, like still seeing fund inflows into ARK over like the last 12 weeks. And so you're still seeing that there's some risk appetite by the dip mentality there. And I think this is just like a larger credit unwinding at play that everything is affected by. But that said, I do think I have to run. I got some other things to take care of today, but really appreciate you guys having me on. And let me share some thoughts.